Okay, so good morning, friends. So this is the chart of CDSL, and if you see, right, we are not sure when to buy this stock or when to exit this stock. Uh, and you guys, please mute yourself, otherwise I'll have to remove from the meeting. Guys, please mute yourself, please. Okay, sorry. So we are not sure, please mute yourself, otherwise I'll have to remove you from the meeting. Thank you. Guys, please have a decency. Am I audible or no?
Yes, you
Yes,
are audible.
audible, sir. Yes.
Whoever is not on mute, can you mute yourself? Guys, please mute yourself. Have some decency. Okay, sorry, friends. And if you see, right, really, there's someone who's like irritating. Don't do this, yeah. I think 5 minutes. Okay, sorry. So if you see, right, I will plot the popular moving average. Like all of us use 21 moving day average. And if you see 21-day moving average is too close to the price, like we will not be able to catch the trend or like catch reversal using like 21-day moving average. But on the other hand, if you use 100-day moving average, it's quite far. Okay. Again, we don't have touch at the moving averages. And moving averages are the price actually, if you see, right, all the price actually they try to come and touch the moving averages. They bounce from the moving averages and they get support at the moving average. So basically, the moving average is actually called the dynamic support line. But if you see, this is a support line, but the price has never been touching or never been testing that. So let us go with the other moving average that is in between these two. And if all of you are popular, if all of you, if you are familiar, then people use 50-day moving average. Yes, 50-day moving average. All the algos run or the big fund managers they use 15-day moving average, and it looks like very good. But we don't want to like copy them, so we will try to replicate what they are using. 55 happens to be a Fibonacci number, so we are just trying to navigate a bit away from what the books say. but it's almost close. Like if you really want to understand the difference between 50-day moving average and 55-day moving average, it's almost the same. Doesn't differ much. Very slightly, hardly 1%, half percent it differs. But we are not trying to replicate the 50-day moving average. We'll stick to 55-day moving average, which happens to be a Fibonacci number. And if you see, right, now you see price is almost trying to touch the moving averages every now and then. And it requires a big force to break down or like break up the moving averages. Okay. So we will not take trades at this region, or will not try to, our strategy will not be to try to catch trades at this point. Our strategy is to like, okay, exit the position now. It has made a run up. Let us exit here. It has made a run up. Let us exit here. Okay. So from 1500 to 1350, it's almost like 150 rupees more than that. So it's like more than 10% fall in your stock. Okay. Same way here, like from 1650 until like 1350, it's almost like 20% or 18 to 20% fall. So rather than having such big losses in our portfolio, right, we can exit in a timely manner. It's not like I'm not saying like we'll exit at the top. It's not possible. No one can buy at the bottom and exit at the top. That is not possible from all of us. But at least we can minimize at least like 15% or 8% fall we can avoid in our portfolios. And whenever it is again like touching the moving average, let us purchase the same stock, same quantity what we actually sold at a little higher price. A differential of 8% every time, right? It means a lot for us. Okay, this is 1 year chart, and every time a 1% like a 8% fall or a 6% fall, right? Even three times if it has fell, and we are catching at the same point, so we had made 18% within 3 months or within 2 3 months. Okay, rather than waiting the entire year for 10% 20%, within 3 months we have exit and saved our portfolio. And otherwise, if we had caught the reversal again, we would have made 15-18% within 3 months. Okay, so this is a strategy that we are going to learn today. And to catch this, right, we have to be familiar with some of the Fibonacci numbers or Fibonacci ratios also. Okay, so we'll make ourselves familiar, or I'll actually Google that for you. So if you see Fibonacci numbers, we will follow this sequence. Okay, so 55 was one of the Fibonacci numbers, so that is why I choose 55. So if a stock moves up by 35% or a 34%, or if it moves up by 55%, right, or if it falls down by 55%, all those points we can actually choose to exit part of our portfolio. Okay, so it has made a run up until 34%. Let us book it partly. Like if it has moved from here to here, it has moved 34%. If we make a part exit, right, we can be saved from this fall. Okay, and from below until this point, if it is again 35%, we can save part of the profits actually. Okay, so this is Fibonacci numbers. And if you talk about Fibonacci ratio, it's also something similar to this. So it's 1 divided by, so 23% move, 38% move, 61% move. So all this can be in terms of rise or fall as well. Okay, so we will try to build that. And if you are familiar, if you move to trading view, right, it will actually navigate, or it will give you how much you can actually draw lines from here to here. It will tell how much the stock has actually moved in terms of number of candles as well as even the percentage move. Okay, but in ChartInk, what we are going to do is we'll just prepare the scan. We will try to catch these scenarios. Even the fall from here, right, we can actually catch the rise from here to here. Okay, it's not only always like exiting our portfolio. We can even catch a falling stock, like catch some of the reversals. We can actually do that. So let us check that. So the first criteria, the Fibonacci series or the Fibonacci number, what I told is if the stock has moved up by 35%, okay, 38% in particular, if it has moved up by 38%, this 23%, right? So 23% is a small move. So let us not catch small moves. Let us actually target mid and larger moves. And for now, we'll just catch the 38% move. Okay. So rather than trying to have your scan on the cash stocks, right? Cash stocks is like almost like 2000 stocks or 1500 stocks. Let us limit ourselves to quality stocks. So we'll just go with Nifty 500. And the first criteria that I want us to do is catch this stock once it has moved 35%. Okay. So this is the EMA line. And what we'll do is like if the stock has moved 35% or 38% in the last 3 months or 5 months, let us try to catch first those stocks. So what we can do is the first criteria is current close of the price. If it has moved, so basically we are going to see the difference between the EMAs and the price. Okay, so in the last 3 months is 3 into 21 days, 63 days. If I take 5 months, it will be like approximately 100 days, 105 days to be particular, but approximately 100 days. And in the 100 days, we will take least of the EMA. Okay. So we are going to take EMA of close, but we are going to take 55-day EMA. So basically what I'm trying to do is from this point subtract the minimum EMA. Maybe if it at this point, right, this is the minimum EMA, around 1000 rupees, and the stock has moved until like 65%, like 1065 is like 65%. So if it has moved 65%, let us try to catch this point first. So the difference between the price and the difference between minimum of the EMS in the last 100 days is taking the minimum EMS, and I want the difference to be at least 35%. So what I'll do is 0.35, and if you want to follow the Fibonacci, you can actually go with 0.38 actually. Okay, so instead of 35%, we'll put 38%, and the stock has moved 38% from our EMA value. So take the EMA value minimum of, so again, don't forget to change the EMA to be 55-day EMA. So what basically this does is it gives us all the stocks that have moved more than 55% from the EMAs. We will take this as an example. So it is taking the current closing price, and in the last 100 days, what is the minimal EMA? Maybe at this point. So it is almost like double here, not exactly 38. So it is greater than 38%. So this point was, or this stock was picked up. But now what we have to do is stock has risen a lot. Okay, it has moved up by 35%, 38%. But we should not short when it is actually rising. We should actually short when there is a reversal. Okay, it's not like a short directly just because it moved 35%, because there is no limit, it can still go higher. So we need to actually catch a small reversal. So how do we catch this small reversal is if from here to here there is a 4% fall or a 3% fall, right? That can be treated as a reversal. So stock has moved up by 35% and it is correcting by like 3 to 5%. Then that is a small reversal that has happened in the stock. Am I clear? So there is a run up of 35%, 38%, and a small correction of like 3 to 5%. And we need to catch this reversal point. So what we do here is uh, we try to calculate the recent highs. Okay, so here we have taken minimum of the lows. So we can just repeat this line. So what we will do is we will take maximum of the last 5 days or the last 3 days high. Okay, so we will take instead of EMA, we will take directly high. So basically, what I'm trying to do is from this point to the recent high, the fall must be at least 3 to 5%. Okay, so in other words, we can actually reverse this. Okay, it is better we reverse that. So daily max of last 5 day high, it is taking the recent 5 day high and subtracting with the recent close. Okay, so current price from the recent high, I'm subtracting the current price. That fall should be slightly like 3 to 5%. Okay, should be slightly greater than 3%. So 3% is 0.03, 0.03 times of max of last 5 day high. Okay, I'm taking 5 day high. So basically what it is doing is the difference between the recent close, the difference between the recent close and the last 5 day high should be greater than 3%. I want to catch small reversal. Okay, so it is actually catching the small reversal, and I don't want the fall to be large. Like I don't want to catch the stock at this point. I want to catch within 3 to 5% range. So what I do is it should be greater than 3%, but the difference should be less than 5%. Okay. So let us see if we are getting some stocks recently. Okay. We are getting same BDL again. So was there a reversal in BDL? Yes, there was a slight reversal. Okay, if not on the same day, even on the same even if not on the next day, but even on the same day there's a slight reversal. Okay, the price went until 2096, but currently it is at 2015, 2016. So it has fallen by more than like 5%, like less than 5%. So that stock is actually filtered. Okay, maybe we can choose one more stock, Engineers India. Okay, so Engineers India, okay, the same happened on the same day. There is a slight correction. It went until 239, but now it is at 229. Okay, so slight correction happened. So these stocks, right, resemble something like this. Like it has made a high, then a recent fall. Okay, so we can treat this as a reversal candle, and again, we should not take the reversal at this point, okay, where the EMA is very close to the price. We should have at least like 10% or 8% fall that is possible. So we should see that the stock is from here to here is at least like 8 to 10%. The difference between the EMA and the current close should at least be 8%. There is no point you select the stock here, right? Because the EMA is very close, hardly 4%, 5%. We don't want to catch small falls. We want to catch a larger fall. Okay, so to catch the larger fall, the EMA has to be away from the closing price. So what we do is we add a few more filter criteria where we can actually just copy this line again. I'll just move it here. So the difference between the current close and today's EMA. We don't have to take minimum all 55 EMAs. We will just take today's EMA. Guys, what is happening, guys? Sorry. So what we are going to do is we are going to take the difference between today's close and today's EMA, and that difference should be at least more than 10%, because we don't want to catch very small fall. We want to catch at least a bigger fall. So 10% of current close is also okay. Okay. So what this does is it will actually show us the difference between the current close and today's EMA. It should be actually more than 10% at least. Because guys, can you mute yourself? We will take the call after some time. We will take the questions after some time. Please. Rakesh, bhai, please mute yourself.
Good morning.
Yeah, can you please mute yourself? Good morning.
सेशन चालू हो गया सर?
Okay. चल रहा है भाई, प्लीज म्यूट योरसेल्फ. Sorry. So what we are trying to do is we are actually trying to catch the stock once it is far away from the EMA. We don't want to catch a scenario here where the stock is just 5% away from the EMA. Okay. So that criteria I have added. The difference between the current close and current EMA is at least greater than 10%. Okay, you can choose 15% as well, 12% as well, but I just put greater than 10%. So definitely it will take 12%, 15% also. Okay, so let us run these stocks. Let us check if there are any stocks recently. Okay, again all the stocks are there. And the next condition, what we need to check is if this candle is a red candle or something like that. If it is on the same day, fall is not that good indicator. We'll actually wait for the confirmation for the next day. Okay. And if the next day is actually less than this candle, right, is less than the lower of this candle, is a very good reversal candle. But if you don't have such scenario also, still fine, because stock has actually corrected at least 3 to 5% from the top. Okay. So I'm just adding that. If there is a red candle, that is well and good. But if you don't have a red candle, it's still fine. So as of now, I am not adding that filter. But visually, you can check on the charts. A reversal pattern below this low, below the low of this candle is very good. Something here. But if you don't get that, that's still okay. Okay. So I hope I'm clear with the conditions. The first condition was the stock should have at least moved greater than 38%. So 38% from the EMAs. Okay. So we are taking the least of the EMAs. From this EMA, the stock has actually moved up by at least 35, 38%. And next, there is a small correction of at least 3 to 5%. Okay. So if doesn't have to be like just 3 to 5, you can even make it 3 to 6%. So it all depends on how much buffer you want to add. So a 3% reversal would be good, a minimum of 3%. So that is why I put at least 3%. If you just put 1% reversal, right? what happens is it might give a temporary 1% reversal, then it can start moving up. So to have a strong reversal, at least there should be a reversal of 3 to 6%. So we just mark 3 to 6% difference of reversal. And we don't know like what is the maximum or like what is the highest high. Okay, in the last 5 days, what is the highest high? We are taking that, and from the highest high, at least a 3% fall or a 5% fall would be a good reversal point. So that is what we have done here. We have actually taken the maximum of the last 5 day high, and from that value, our stock should have corrected by at least 3 to 6% within this range. If it has corrected by 10%, right, there is no point you go chase the stock after it has corrected hugely from here to here. There is no point. Okay, we want to catch just at the top when there is actually a small reversal. So that would actually help us to make some solid gains rather than having a 10% correction. Then maybe it can retract a bit, we'll be holding in a loss. So instead of that, we'll just try to have at least 3 to 5% reversal, then catch the stock. Okay. And this last condition is the stock should have at least a buffer like from the current day to here, right? It should be at least 10%. There is no point catching this small reversals. Okay, because what can happen is at whenever it touches the EMA, right, it'll actually change the trend back. You see, whenever it is coming very close to the EMA, it is actually changing the trend. Okay, so EMAs act as a dynamic support. So even if you see here, right, what happened here is it just went nearby, then it fell. Okay, and if you know the real significance of the EMAs, right? So people who have missed the train here, okay, they have missed the train here. If they enter at this point, right, it is a wrong entry place because what can happen is stock can fall. So making an entry as close to the EMA is very good opportunity. The same way here, people who miss to short here, right, they will try to short again here. And people who miss to short here, if they come and they short here, right, they might actually encounter a loss. So what they do is they try to short very close to the EMAs. Okay. So that is why there is a small pullback every time the stock has moved up, pull back, pull down here. Okay, moved up, then pull back, something like that. The same way here, stock has fell. It doesn't go directly fall. Okay, there is a small pullback. Okay, there is a small pullback. So we are trying to catch these pullbacks. We might definitely go wrong. Okay, I'm not telling the strategy is going to give 100% profits, but at least we will catch the trend reversal a bit early. Okay, so the scanner that we are actually making is to exit small part of our portfolio. We will reverse this scanner, and this is actually a scanner for exiting portfolio. Oh, I haven't logged in. I'll take the screenshot. I'll actually send it across, but you just remember what this is all about, and after that I'll share the scan with you. Okay, but please understand the concept rather than trying to catch or get the stocks what are here. I definitely need to log in. What do I do? Let's see if I can change this. Please mute yourself. Q&A after some time. Please mute yourself. Please mute yourself. Oh, thank God, it allowed us to copy and paste. So I'll save this. Uh, uh, Guys, do you understand or no? Please mute yourself.
Hi, good morning. This is basically a sell indicator, is it?
Please mute yourself. Yeah, this is Cell. I'm going to make a now. Sorry, guys. I think my laptop is heated. That is why.
Not audible.
Sir, you are not audible.
No voice. No voice is coming. No.
Yes. Yeah, yes.
Okay. Okay. So we actually made the cell scanner. So what I did a save as. I just repeated to make a buy scan. We'll just modify this buy scan for some other stock. Previously we saw CDSL. Now I am choosing sale. So what has happened is we are going to catch the fall from this point until this point, or from this point until this point, and the reversals. Okay. So basically we again have to do the difference between EMA and the current close, and this difference should be at least 35%. In the sense, from 150 rupees it has fallen to 110, so more than like 40 rupees fall. And if this 40 is at least 35% of this fall, so that we need to do. Okay. So instead of, so what will happen is, instead of minimum of the EMAs, right, what it will do, if we take minimum of the EMAs, it will take this point. But instead of minimum of the EMAs, we have to take maximum of the EMAs. Guys, please mute yourself. Please, sorry. Okay, please mute yourself. Okay. So rather than having the minimum code, we have to take the maximum point of the EMA, the black line, and a fall from there until this point. Okay. So I'm just going to change that. I'll just change that to max of then the last 100 days. we are going to take EMA of 55. So from the 55-day EMA max of the value, how much low the close has fallen. So current stock has fallen, and this fall has to be at least 38% of max of 100-day EMA. So you understood, right? So from a maximum value of the EMA, it has fallen by 38%. So today's close is less than the max of EMA by at least 38%. Okay. And now what happens is the stock has fallen. There has to be a small reversal. Okay. There has to be a small reversal. So what happens is
We lost the
from the
screen
lows,
share.
my screen is not in share. It is showing in share actually. Screen sharing is gone.
It's there, Suprabhai.
We can see it now.
No, we can see.
Okay. Okay. So the stock has fallen from here to here. We need to catch this small reversal. Okay. We need to catch the reversal point. Okay. So we need to take the least of the price in the last 5 days, minimum of the price in the last 5 days. Okay. So the condition slightly changes. So our current close, so this has to come here. So our current close is slightly greater than the minimum of the prices in the last 5 days. Okay, min the price, min of the last 5 day lows. Okay, so what happens is our stock has moved slightly up from the lows. Okay, close minus minimum of the last 5 day low should be at least 3%. Guys, please mute yourself. You're causing disturbance to others.
Uh,
Guys, basic decency here. Please mute yourself. Please. Please. Sorry. So the price has moved slightly from the last 5 day low. Okay. From the last 5 days low. From the last 5 days low, it has moved slightly up by at least 3%. I don't want a 10% rise, okay? 10% reversal, I don't want. At least a 3% reversal. We are trying to catch that 3% reversal from the minimum of 5 day low. And I'll just delete, I'll repeat this line. And the rise has to be less than 6%. I don't want a rise of like at least 10%. Between 3 to 5 or 3 to 6% rise is what I want. Okay. So from the bottoms, it should have moved at least by 3 to 5%. Okay. And the last condition is the difference between the EMA and the current price should be at least 10% because we want to catch at least this 10% move, right? If it is a small 2% move, 3% move, we don't want to catch that. We want to catch a bigger trend, bigger reversal opportunity. Okay. So from here to here, there is a bigger reversal opportunity. We want to catch those. So if it has made a small reversal of 3 to 5%, and if there is still a possibility of another 10 to 12%, let us catch those stocks, not like a small reversal opportunity. So current close minus EMA of 55 days. So it can be like the EMA coming on the top actually. So I'll just reverse it here. So EMA is at the top now. So the EMA of 55 minus current close should be at least 12% of current close. Okay. So this is the scan for buy. I'm saving it. Let us go and check the stocks that were filtered earlier. Okay. So random date, April 16th, Scient. Okay. So April 16th is somewhere here. Okay. So what has happened is stock has fallen. Okay. It has fallen by more than 30-35%. Okay. And there is a fall here and there is a reversal here. A reversal of 3 to 5% happens. And from here to here, we can actually catch the stock. Okay. Without any fear. Okay, don't be afraid. Okay, stock has fallen so much, it can fall further, it can go to zero. Yes, chances are there, but what has happened is it has given us a 3% reversal, right? Let us catch that 3% reversal. Let us keep 1% buffer as our stop loss. So anything less than 1% of the recent low can be our stop loss. So we are actually having a small buffer of 4 to 5% of stop loss only. Okay, stock can go further 10%, 20% it can go, but we are going to cut our position once it goes below 1 or 2% below this recent lows. Okay, we got Apar Industries. Let us check Apar Industries on the same day. Okay, so it has fallen a lot. We got a small reversal here. Okay, so what happens is the reversal might have happened here itself. We could have got here itself. Let us go and check the other dates, but randomly I chose 16th, so it is telling from here. Okay, see, almost from 5,000 it has moved to 8,500. Okay, but our first target would be once it touches the EME. Don't assume it has fallen this much, it will recover all the way. Let me hold until all the way. No, let us pocket some gains. You purchase 10 stocks, at least 5 stocks or 4 stocks, please exit here. 40% of your holdings, please exit, because this is our target one. Okay, the rest you can actually continue to hold with the trailing stop loss. So the stop loss can be moved or shifted to here rather than having the stop loss here. You can actually move your stop loss to this point, then travel all the way wherever you want. Okay, maybe some other random date, random stock. Sonata Software 25th March. Okay. Where is 25th March? 25th March is somewhere here. Okay. Maybe we got a bit late. Sonata would have even appeared here. I'm not telling it didn't appear here. But the date I chose is happens to be here. It fell. How do we make sure Sonata came earlier as well? Okay. So select this option where it is interactive. There it will show all the colored lines. We are again going to the same day, 25th. Now Sonata will open. You just check Sonata, you have many vertical green lines. So all those lines are the places when the stock got filtered correctly. Okay. So all these days. So March 3rd also it got filtered. It's not only on March 25th at this point, but it was even filtered at this point. Okay. So from here to here or from here to here. So all these were some reversal dates. Okay. Exponential moving average. I will draw 55-day moving average rather than 55, and color I'll make it somewhat bright so it is visible. Okay, so you see the stock has fallen a lot. Stock has fallen a lot. It gave a reversal opportunity. Maybe from here it has moved till here. Again it fell. There is again a reversal opportunity. Okay, even there was a reversal opportunity on this date and it moved all the way. Okay, So this is what is called retest. Like the stock will try to retest the EMA, but we are catching at the small reversal zones. Okay. Now please unmute yourself, and if you have questions, you can ask.
What are the best points of entry as per Fibonacci? Is it 38 or what?
Sorry,
Best point,
sorry.
best point of entry as per Fibonacci levels.
Sir, this is showing the call will end in 8 minutes.